People used to ask me, where do you stand on a wall? And the main reason I was against it is I said, if we build that wall, it can be used to keep the Americans in. There's no way out.
Dr. Doom, alias Peter Schiff, has a warning with regard to the rising mortgage crisis. The famous American stockbroker and financial commentator says that the mortgage crisis is just getting worse, leaving shocking effects. Let's find out why the radio personality and a popular economic predictor, Peter Schiff, is coming up with such exaggeratedly dangerous trends in mortgage and refinance applications. Let us remind you that the host of the Peter Schiff Show podcast and the author has been quite vocal about the shift in mortgage rates in recent times. He had even shared on X on 7 August 2023 his views on the scenario. In his tweet, Schiff wrote, "The 30-year fixed-rate mortgage peaked at 18.45% in October 1981 and trumped at 2.65% in 2021. The current rate is 7.4% and rising. 40 years of falling mortgage rates, plus married women entering the workforce, allowed home prices to rise much faster than incomes. Look out below." As soon as the post was made public, Schiff received backlash for having a problem with his conclusion. Although Schiff's post received nearly 4,000 likes, it had its own set of negative publicity. Married women entering the workforce wasn't a cause of inflation, it was an effect of inflation, user Joseph Wenger rebutted. It became a necessity in the 70s. Of course, there were other reasons, but inflation was one of them. Another user blamed Schiff for accusing women for increasing housing prices, which pushed Schiff to clarify the original point that he intended to make from his tweet. The famed economist and financial specialist wrote on X, which was formerly called Twitter, "That's not what I meant. Married women worked to help their husbands buy more expensive homes. Women working didn't cause home prices to rise, but rising home prices caused women to get jobs. It was inflation that caused home prices to rise." For the unaware, let us get back to the 1960s, when the American economy transformed as women started entering the workforce after the success of the feminist movement. It was married women who entered the workforce, who were also partly liable for the higher prices in housing, which is what Schiff meant from his 2 tweets recently shared on X. It was prior to the 19th Amendment that provided women the right to vote in 1920, and only 20% of women were gainful workers in the early 20th century, according to the U.S. Census Bureau data. It means only 5% of married women got an opportunity to work outside their homes. When the Great Depression started in 1930, 50% of single women had joined the workforce, and 12% of married women worked, according to the data revealed by the Brookings Institute, lending faith to Schiff's assertion that economic realities encouraged women into being a part of the workforce. Laws against pregnancy discrimination and workplace harassment in the late 1970s were what further boosted women's presence in the workforce and labor participation among women, reaching a high of 78% in the late 90s. As you might already be aware, the latest rules from the Biden administration's Federal Housing Finance Agency have changed the mortgage fees, as some borrowers having a hold of good credit may end up paying higher fees compared to those with lower credit scores. This transition has sparked a new debate. Peter Schiff has posted in an interview on his YouTube channel wherein he advises the host who shares his concerns for those who intend to buy a home going through punishment for having a good credit score. Schiff's response was, "Just miss a few payments, screw up your credit score. That will help your mortgage rate." Schiff, who had earlier successfully predicted the financial crisis of 2008, pointed out the problems with this change. "This new rule encourages people to make smaller down payments than they might otherwise have made," he said. He further added how one gets a better rate if they make a big down payment. However, now Biden has ensured that the better rates shall go to people who don't make a big down payment. According to Schiff, even though the new rule may lead more people to become proud homeowners, it will not go down too well for the American banks. Schiff warns that there is a worse part in this scenario, as more riskier borrowers are going to apply for housing loans to the banks who cannot remain solvent for a long period. It would make mortgages end up in defaults. It means Schiff hinted at how buying a house can be quite a troublesome burden in today's changing environment. The U.S. Federal Reserve has executed important interest rate hikes to tame unchecked inflation, and mortgage rates have increased as well, which simply means that home buyers have to grapple with larger mortgage payments. The data revealed by the Mortgage Bankers Association states that the median mortgage payment for applicants was $2,093 in March, up 1.6% from $2,061 in February. In a nutshell, you will go crazy if you plan to buy a house in America. as they are not that affordable. Mortgage Bankers Association Associate Vice President Edward Seiler said in a statement that recently, the affordability index had hit a new survey high with both the typical purchase application amount and monthly payment increasing on a monthly and yearly basis. So if you plan to buy a home in the U.S., then you will have to chip in more than simply the mortgage payment. You will also have to be careful of the insurance, property taxes, maintenance, and repairs. Schiff remarked how houses are very expensive by taking his own example, as he owns several of them in the U.S. Houses are just money pits, and one cannot really own a home if they are broke, said the popular investor. In his recent interviews, the financial expert has given several warnings against the high mortgage rates and stock market uncertainty. He has even predicted the upcoming year 2024 would introduce further economic instability and one of its worst recessions. Want to know how Peter Schiff draws his economic views? Well, one cannot ignore his expertise regarding growth, stagnation, and inflation. According to his predictions, the coming years will involve declining market performance and a skyrocketing inflation problem. This will possibly lead to consumer caution, business stagnation, and a lowered trust in the U.S. Federal Reserve. Peter Schiff debated in a recent article that the global economy would go through huge changes in the coming years. Particularly, Western countries will face economic downfall because countries like China may take undue benefit from the weak U.S. dollar. Competition with different countries will also increase the stock market burden as it is struggling to recover from the 2020 COVID-19 pandemic situation. Simply put, the U.S. economy will not likely be the top performer on the economic landscape worldwide as we advance. High mortgage rates and declining real estate prices have asset prices falling all over. The Federal Reserve and experts, such as Schiff, have repeatedly warned the government to reduce its spending capacity. However, as Schiff predicted, assets like homes, cars, and stocks no longer hold the value they once had and are not able to provide the security they did in the past. Peter Schiff mainly suggests reducing debt and investing in precious metals. He predicts the economy will become significantly worse throughout 2023 and into 2024. Yeah, we are empathetic to understand your situation of how economist Peter Schiff's predictions can be daunting and unsettling. But don't worry. After all, no one really wants to witness their country getting hindered and losing their profits. So, what do we really do in such economic uncertain times? A wise advice can be to diversify your investment portfolio and move assets offshore by creating a secure Plan B. You can think of renting your home as it creates a stable rental income stream for landlords in times of elevated home prices. If you want to collect passive income by investing in residential real estate, buying a house isn't the only option. There are real estate investment trusts, REITs, that specialize in apartment buildings and single-family rentals. And suppose you are not interested in the volatility associated with publicly traded REITs. In that case, there are also fractional investment platforms that allow retail investors to invest directly in real estate with as little as $100 through the private market. For the unversed, Peter Schiff also serves as the CEO and Chief Global Strategist of Euro-Pacific Capital Incorporated, a broker-dealer based in Westport, Connecticut. He attained fandom after his predictions related to the 2008 financial crisis were found to be useful. He has also written many books on how to manage money, make good investments, and attain knowledge of free market economics and the principles and advantages of individual liberty, limited government, and sound money. He is also engaged in different and esteemed positions in other financial services companies, including Euro-Pacific Asset Management, Schiff Gold, formerly Euro-Pacific Precious Metals, and Euro-Pacific Bank. You can click on like on this video if you enjoyed watching this video. If you find this video informative and useful, then don't mind sharing it with your friends. If you want to explore further videos on the stock market, business, investment advice, money management, and other finance-related content, then feel free to subscribe to our channel.